Hey everyone, I'm Cary Smith and I'm sitting here with Cheri Turner.
Everyone.
And Cheri and I are both with Client First Capital. And Cheri, you've put a topic together for us today, which, I'm just going to sing the title. So today we're talking about changes. so, so, but like everything in this world, things are always changing. But specifically, what we're talking about today is changing as it pertains to charitable giving under the new OBBBA Act, right? The
Right.
Trump
Big, beautiful
changes.
butterfly.
That's right.
Yeah.
And so, but it's making some meaningful changes as it pertains to, if you itemize or don't. And so we're going to talk about some of those changes today. I think it's an important topic for people to at least be aware of.
Absolutely.
And there may be an opportunity for some people to do something this year, right, that could benefit them from a tax perspective, but
Yes.
also, make a difference in giving to a charity. And so I'll have you, kick us off on what these changes are.
Great. So the first one is that there is a new AGI floor for individuals or families that itemize. So what this means is if you do itemize your deductions beginning in 2026, you'll only be able to deduct your charitable contributions that are above 0.5% of your adjusted gross income or AGI. So put simply, your donations essentially now have a clear minimum before they count. So for example, if your income was $100,000, the first 500 or 0.5% won't be deductible anymore. Anything you give above that amount is what is deductible on your tax return. So for example, if you donated $3,000 throughout the course of the year, you can now deduct $2,500 of that contribution. Again, assuming that your income was at the $100,000 level or your AGI. Now, unfortunately, this means that if you do itemize, your generosity won't exactly give you the exact same tax break that it used to. So what can you do? So you can think of stacking your gifts. If you spread them out into small amounts each year, then that first $500 won't qualify for deduction every year. But one thing to note is that if you bunch your donations together in one year or use tools like a donor advised fund, you make sure that your giving clears that 0.5% floor in that first year, making the majority of the remaining contribution deductible. This way you get a little bit bigger tax benefit.
Yeah, Sheree, I think that that stacking will probably be a good strategy for a lot of people moving forward as the law changes. And it's a way to make sure that you're giving because it's important to you, but also, from a estate or a tax planning perspective, make sure that you're, I always consider tax deductions not just a benefit for you, but maybe even allow you to give more, right, to the charity that you care so much about. Okay, so that's the first one. I think we said there's three changes, but there are three changes. So what's the second one?
Mm-hmm. The second is a permanent deduction for non-itemizers. So this is great news because so many people no longer itemize due to the higher standard deduction, right? So starting in 2026, even if you don't itemize, you'll still get some credit for your charitable giving. Single filers will be able to deduct up to $1,000 in contributions and couples up to $2,000 below the line. Now, when I say the deduction is taken below the line, it means that it lowers your taxable income, but not your adjusted gross income or AGI. So what that means is that it won't affect things that are tied to the AGI, like your Medicare IRMA surcharges or certain tax credits. So in short, you'll still get a tax break for your giving, but it won't change the income number that's used for calculating those other calculations. Now, in the past, unless you itemized, your charitable giving simply didn't count for tax purposes. You gave because you wanted to, but you saw zero benefit on your tax return. Now, with this change, you'll finally see a bit of a monetary benefit. So if you're already supporting your church, your local food bank, maybe an animal shelter, or some other cause that you love, those gifts will now give you a limited tax break too. One thing to note is that this deduction applies to cash gifts to public charities, but not to donor advised funds or to private foundations.
Okay, that's an important point to know. And I think this particular bullet from what I understand, what I was able to read is somewhere between, maybe 13, 14% and 22% of Americans itemize now anyway. And so for a vast majority of people, they're not itemizing. So this will be key for them to know and to understand how this works. And then that last point you made about donor advised funds, I think is a key point as well.
Yeah. Change number 3 is that there's now a cap on deductions for high income givers. So starting in 2026, there's a new rule for people in the very top tax bracket. So if your income puts you in that 37% bracket, your charitable deductions are now capped at 37% rather than the 35% rather than the 37% bracket you're in. So let's put numbers to that. Today, if you're in the top bracket and you donate $1,000, you would reduce your tax bill by $370 or 37%. Under the new rule, that same $1,000 donation will now save you $350 rather than $370. It's not a massive difference when you look at one gift, but if you're an individual or a family that gives large amounts year after year, that really can add up. And keep in mind that this only applies to those high earners, roughly the top 1 to 2% of taxpayers. For everyone else, your deductions will not be subject to this new rule. But what can those high income donors do about it? So one way to think about it is not just what you give, and not just how much. For example, donating appreciated stock instead of cash becomes a really big win, because when you donate stock that's grown in value, you still get the deduction of the full value of that stock, capped at the 35%, of course, but you also completely avoid paying the capital gains on that tax from the growth. So that's really a double tax benefit to you. You reduce your taxable income and you skip the tax bill that you would have owed on that stock. Another great tool is a donor advised fund, or DAF, as we discussed. Now, a DAF won't get you around that 35% cap, but that's the same rule does still apply to that. But what it does give you is flexibility. You can bunch several years of giving into one large gift to the fund, claim that deduction in that year, and then spread out those donations over time. One thing to note is that this really simplifies your record keeping by tracking only one contribution for your taxes, but then allows the money in the fund to be invested, potentially increasing even more so in value and growing your charitable impact over time.
Okay, very good. So, Cheri, I'm just going to make this point. We work with a lot of clients that, help them with tax strategies, and a lot of them are involved in charitable giving. And, my experience, tell me if you feel this way too with the people you talk to, most of them, their charitable giving is from their commitment to the charity and their commitment to making a difference, either in their community or their church or wherever it goes. And they want to be smart and have good tax planning and take advantage of anything that they can. But the tax planning is not what drives the charitable giving. Right. It's the good people that they are and the difference that they want to make and the ability to give back that drives that decision. And so, what I would hope is if you're watching this, definitely be smart about the way you give and take advantage of any opportunity you can. But at the same time, giving is what really matters here.
Absolutely. Absolutely. And I think we see that in looking at past years, that even though so many individuals weren't able to claim if they weren't itemizing, you still had a good percentage of those individuals contributing to those causes that are meaningful for them.
Yes, absolutely.
Yeah.
Okay.
Yeah. And then one last thing to kind of look at, although it's not a direct charitable change from the OBBBA, but it's the estate planning impacts from it. So essentially, the amount that you can pass on to your heirs without paying any estate taxes now has permanently increased to $15 million per individual or $30 million per couple starting in 2026. So for some families, this means estate taxes won't be the main reason that you create a charitable trust anymore. That's right. Your estate is under that threshold. You can focus on giving simply because you want to make an impact, not because you're worried about avoiding the estate taxes. Now, for those with very large estates above that new limit, the higher exemption does give you more room. You can pass on a bit more wealth directly to your family and still use those charitable tools like charitable trusts to create a legacy of generosity. One thing to note is that these strategies are less about tax avoidance and more about aligning your wealth and your giving with your values.
Okay. And, Cheri, I make one other point here that I meant to make a little earlier, and I think I might have sidetracked myself. But, these changes become in effect in the 2026 tax year, so next year. So there could be an advantage to charitable contributions this year if that's something that you're thinking about. And so for some people that are thinking about 2025 and taxes and charitable giving, it might benefit you slightly to act this year as opposed to waiting till 2026 for that contribution.
Right, especially for those individuals who are itemizing, who will be subject next year to that 0.5%. If you're at a high income level, that 0.5% could be quite a bit. The 2025 taxes and contributions are not yet subject to that rule.
Okay, very good. Okay, any other thoughts on this?
Yeah, I think I'd just say that when it comes to giving, the rules might have shifted, but your ability to leave a legacy of kindness and purpose still remains the same.
Yeah, very well said. Okay, so if you're watching this video and you're finding some value in this, please give us a like. It helps other people find our content. Also, if you need to have a conversation with someone about charitable giving or tax planning or estate planning, we'd love to chat with you. We'd give you a free consultation. You can reach out to us at clientfirstcap.com. And from there, you can either give us a call or schedule an appointment. We'd be happy to sit down with you. Thank you for watching. Good job, Cheri.
Thanks, Cary.